Welcome to another session of Learn and Grow series. Today I have a very special guest, my good friend Trevor Thompson with us. And we have a very interesting topic. Know the facts before investing in real estate. A little bit about Trevor. He's an accredited investor and have participated in 17 syndication as an LP, limited partner. And he's also a GP on 240 doors in San Antonio syndication as well. Currently, he is looking to participate in deals as a GP and asset manager in Central Texas area, right? Mostly.
Yes.
And his background is, he has a strong background actually in entertainment industry. So welcome again, Trevor. And I'm super happy to have you with us today and would love to learn about your story, how you got started.
Yeah, so it's awesome to be here. I have a very strange background. I spent all my life in the entertainment attractions industry. So started at Ripley's Believe It or Not at age 13 and 5 years there, 18 years with Guinness World of Records. And then oddly enough, opened a year-round haunted house in Florida and then switched over to iFly indoor skydiving. And the interesting thing about that was at the very first team meeting, the owner of the company gave everybody a copy of Rich Dad, Poor Dad. And I made the mistake of reading the book, going, wow, this is powerful, putting the book back on the shelf and continued with my corporate career for almost 20 years, about 17 before I started investing. So definitely sorry I didn't start sooner.
How did you start in real estate, or how did you figure out that real estate is going to be your gig and that's where you're going to be investing and getting the good returns on your investment?
Yeah, so I always had an interest in real estate, but I had a lot of the misgivings and the fears that many people have, right? That it's not necessarily achievable for the average person. I just didn't realize that. And I've never heard of syndications. And so I always kind of thought, I needed to build enough net worth and wealth so that I can go off and do something. I had no interest in single family homes. To me, that didn't seem like a business. And once I learned about syndicating, then I joined a local mentoring program, got some education, then started self-educating because I'm an obsessive person. And once I get hooked into something, and then almost immediately I started passively investing. And now I got up to, as you said before, 17 different deals. And some of them were by chance. So for example, I would cash in some of my stocks because I was trying to buy a deal, and then that deal would fall through, and then something would come, available, and I would go invest in it. So, there was a lot of kind of how I got there. But then once I got there, I just got so enamored with syndications and with passive investing. It's such a powerful way. And again, I talked about it earlier, but the biggest mistake was waiting. And then now I know it says buy real estate and wait. Don't wait to buy real estate. And I tell you, if I had have started earlier, I would be at a completely different position right now. Completely different. I can even see in the last 4 years that I've invested, how much I've been able to earn, how much I've been able to defer income taxes and all of these things. So starting earlier is always better. But again, a lot of people think they can't. They just don't understand it. And they think, I got to build up some sort of net worth to be able to do it. And they don't realize that there are ways to do it.
Wow, 17 syndications. First of all, congratulations.
Thank you.
But I know it's wow. And what was the time frame for all these 17 syndications?
4 years, about 4 years. Yeah.
Wow. Which is awesome. So, I heard this multiple times. People always say that I didn't start at the right time. I should have started 20 years ago. And some people, they're still sitting, waiting. They think, oh God, this is not the right time. So what is the right time in your experience when to start in real estate syndications or anything?
Yesterday is the right time, but since yesterday is already gone, we got to pick today. Again, I know now if I had started earlier, my life would be significantly different. That building up of that wealth and multiplying it several times in a tax advantaged way is huge. I mean, I've seen it in the 4 years I've done it, and I think to myself, I started when I was in my late 50s, if I had started in my early 20s, it's mind blowing where I would be today if I had done that. Absolutely mind blowing. And now it was a little easier because I did get a payout at work, that we got bought out by somebody and I managed. So that helped accelerate it quickly. But if not everybody gets that. And I could have easily started earlier and then build, I wouldn't be able to probably do 17 deals in 4 years, but I would have been able to do 17 deals in 20 years. And even again, 20 years, I would still only be in my, 40s. Late 30s, still could have, still lots of time to start earlier for sure.
Yeah, for sure. But the thing is, the mindset could have been a little bit different too. Like when you were 20 versus you started in your 50s. I know there's a huge time lag, but at the same time, you feel like maybe you are more mature to make your investment decisions versus when you were in 20s.
Yeah. And definitely like one example I always use, I'm from Niagara Falls, Canada. And I always wanted to buy an Airbnb up there. And, I looked at it and it was going to be $300,000. And I thought, how am I going to swing this? How am I going to make sure that the payments are paid and manage it from afar? And now I've learned so many things that these things are simple. The problem now is that $300,000 home is $900,000. And so if you look at that delta difference in that 20-year period, the value of the real estate would have tripled, and the tenants, the people that are paying the rent basically on an Airbnb, would have covered all of the costs. So, staggering. I would have a $900,000 asset 100% paid for, assuming I didn't refi it I probably, if I'd have figured out earlier, I probably would have refied it a couple times and owned 3 Airbnbs, right? Robert Kiyosaki talks a lot about that, right? Basically it's the BRRRR strategy that a lot of people talk about, but buy it, get it up and going and then refinance it, take the capital out. Because the power of leverage in real estate is enormous. And again, with a syndication, you get to tap into that power, right? You're not signing any loans, you're not doing anything, but you're getting that multiplying power of being able to leverage a property and buy into it. It's so powerful.
And you said you read the Rich Dad Poor Dad that changed your mindset and you learned about the investing that way. So can you tell us about your first deal? How did you land on your first LP deal? Or what was the steps you have taken to figure out, okay, this is going to be the right investment for me?
Yeah, so I knew at some point I needed mentoring. And so I joined a local real estate group here. They were mostly single family, but they did have a commercial section within their group. And so once I joined, man, I just hit the books, right? They had a 21 training week, or 21 or whatever, I can't remember, it was so many days training and, weeks, because they were like supposed to take a lesson a week. And I did it in like, 11 days, right? Because I was just obsessed with it and watched it again, and then started listening to real estate books like crazy, going to podcasts, and just starting to learn. And so it was easy. Now, I know my first real estate investment actually didn't make me any money. So it was a bit of a mistake. I didn't lose my money, but I learned so much from that, right? About how to look at a deal, how to analyze a deal. And it's rare that happens, but it can happen. So I want to make sure we're realistic. But if you get a little better educated than I did when we were doing it, and there's some very simple things to look at that should be able to help you. And if I'd have known those, I may not have invested in that.
So what went wrong in that deal that you didn't make any money?
Yes, it was a couple of things I know. So they did a loan assumption of a bridge loan, and then they couldn't stabilize and get out of it. So I know that's a little complicated if you're new, but trying to move from one debt to another debt. So bridge debt is supposed to get you over the ravine, right, over the valley. And if you get to the other side of the valley and you haven't achieved your stability, there is no refinancing plan for it. So then it's very complicated, more expensive to get it financed. Secondly, they did not estimate for taxes, which went crazy in Texas in the last few years. They made no estimate for an increase in taxes. They made no estimate for an increase in insurance, and they did not have enough money in their CapEx budget, which is the budget they need to renovate the property. They, even though they found some things on due diligence, there were a lot more serious things with things like plumbing and other things that now I know if you're buying a 1960 product, you need to make sure that you have enough money to take care of plumbing and sewer and all of those things. So, you know, definitely if you're investing in an older property, you want to make sure that they have the money to be able to carry that property along.
So one question comes to my mind, generally when sponsors, they share their offering memorandum or OM, we call it, and we do not see the CapEx in there in that much detail, or the taxes or the insurance. What other items that we should ask the sponsor, or what other questions should we ask the sponsor, before making sure that, is aligning with our goals and we should be able to make money on this deal?
Yeah, so definitely one of the most important things is how much has the sponsors invested into a deal? So again, I never knew to ask this question, and they got fees and acquisition fees. So they made money doing the deal, and in theory had no money in the deal. And so that's a big red flag, right? Because I want my money along with their money. So always look for a sponsorship group that is putting more than their fees they're getting out back into a deal. That really aligns your interest pretty quickly. And, to make sure. And then one of the things that this deal had was, a pretty big pref equity position. So pref is where it's basically expensive money that you try to get rid of quickly. And again, when they couldn't refi, they couldn't get rid of that money. So they had a loan pref equity position of 11%. Well, that was about 40% of their financing. And so they had that at this huge, and they could never get out of that, right? They couldn't get out of that. Now, as an upside investor, I got nothing. The pref equity people went from 11 to 7. So at least they did get 7% on their money, sort of in a settlement to end out. But, you just got to make sure you know all of those little pieces. And so having some skin in the game is good. Having realistic numbers. A lot of operators will show you current expenses and where they project them to go, and it's somewhat interesting to look at some of them, right? They all have big rent bumps, but they don't have big operating bumps, right? And, some of the times, yes, you can operate a property for less money by being a better manager, but certain things, insurance isn't affected by you being a better manager. Property taxes aren't affected by you being a better manager. Now, you can be a better planner, you can appeal your taxes, you can do lots of things, but it's very difficult to do that. And again, I don't want to scare people, right? But I want to make sure that people are making good, educated decisions. And again, if you ever, all the real estate stuff you say, know, like, and trust, but I mean, really get to know them. I was new in this group and I didn't really get to know them. Now, they had deals that were successful, and I just got another deal that the same group of people, I was the pref equity position on that particular one. I got all my capital, all my pref payment, and I'm a happy guy. It was a little longer time frame because this one was truly affected by COVID. It was taking underperforming apartment complex, turning them into condos and selling them. Well, you buy that, then you can't evict the tenants, and you got a period of time, and Austin was one of the slowest to allow evictions. Then you get an eviction and City Hall was backed up, so you couldn't get a permit. And then when you got a permit, you couldn't get your supplies because the supply chain was backed up. Now, thank goodness, a hot real estate market saved that deal, right? The prices of the condos went up significantly, and everybody's going to be made whole. But, the plan would have been flawless if there wasn't a COVID in there, and I would have gotten my money out quicker, because they were trying again. That plan was to get pref equity position, get a bank loan, pay off the pref equity people as fast as possible, because that's an 11% loan really, and get moving forward that way.
So, I mean, when you started, you did 17 syndications, which is kind of mind blowing. And then I'm just still trying to wrap my head around, how did you find the right syndicator or the right operator? Because you said multiple times that, good operator is essential for any deal to
Yeah.
succeed, right?
Yeah.
So how did you do that? What step did you take initially? I'm not talking about now, because now I would say you're a savvy investor. You've been through a lot. You experienced so much. So initially when you started, did you just invest blindly, or did you take some certain steps that's going to help us, if we wanted to invest as a passive investor?
Yeah. So I definitely, what I really did was I got to know the sponsors well. So for example, my first out of Texas investment was done with Gary Lipsky and Kyle Mitchell, who are quite popular they're no longer together, but the deal's still there. And I actually was drawn to them because I loved asset management. I wanted to learn about it. So I took their courses, got to know them, met them at meetups. When you spend that much time with people, and one of the things that impressed me the most about them, when they taught the courses and showed us the things, they admitted where they went wrong and what their plan was to fix it. And to be honest, that to me was more impressive than saying, oh, I've got 10,000 doors, I've got this, I've got that. The fact that they were open and honest enough to say, listen, we had a little struggle here, and this is how we fixed it. And that investment, they just put it up for sale, and it's estimated we'll get our 5-year return in 18 months.
Wow. And then earlier you were telling me that you got to work as a property manager for one
Yeah,
of
so that
your
was the
as
first
well.
investment. Yeah, that was the first investment that I didn't make money on, but I got a ton of experience on. So I knew the investment was in trouble, and I went to the sponsor and said, listen, I've got time. Could I help? And so they made me they called me a temporary asset manager. And they actually had an asset manager and he was running like 12 properties as a paid employee. And it was somewhat shocking what I found, because again, I'm super detailed. So I went in there and found the occupancy even wasn't what we said, because they had skips and they were still counting them as in. We were on budget. Well, why were we on budget? Because the invoices were sitting in the drawer not paid. The money was spent. They already did it. And then so they ended up getting rid of that asset manager and said, okay, well, you're all right. You got the property management company to take care of it. You just manage them. And then 4 weeks later, they fired them and said, don't worry, you self-manage it. We'll help you. And there was not a lot of help, but again, it allowed me to learn a lot, right? And of course, COVID hit in the middle of that. And this was a rougher property than I thought I'd invested in, to be honest. They said it was a C property that they're going to make a C plus, and it was truly a D property. I mean, I had gangbangers there, drug dealers. I had armed security for 3 weeks when the drug dealer threatened to kill us all. Walked the ladies from their car to the office, sit in the office, walk them out for lunch, walk them back to their cars at night because he'd gotten released. Because again, prisons with COVID, they started releasing people, and until we could get them back out, so it was definitely like an amazing learning experience, but very stressful. Then they wanted to sell the property, and they basically wanted all the cleanup I did, they wanted to reverse by filling the property for sale. I said, I'm not going to do that. So that was the end of me. It didn't sell. And now they're stuck with all of the tenants that they put in, basically replacing. And the real thing that got us is they just, near the end, they sort of gave up, and there was about an $800,000 retrade at close. So it took 5 months to close the property, and the condition of the property had deteriorated by $800,000. Which was significant and which was a big portion of our profit.
So you said you learned a lot. So
Yeah.
share like couple things for us that's applicable to any property across the board when we purchase something and we try to asset manage it. What is applicable to?
So the most important applicable thing is actually improving where people live. Everybody talks about we're going to renovate a unit and we're going to bump up the rents, but you have to make it a better place to live. That is one of the most important things, especially if you're trying for some sort of reposition. It's just not, we put in granite countertops, it's worth $150 and we're still going to treat you terrible. We're still not going to fix your maintenance issues. We're still not going to. You don't want to have be in a deal where something like that happens. You want to be in a deal where, hey, we're repositioning the property. We want to give you better service. We want you to feel like we care about you as tenants, and we want you to feel like you're coming home. And so there's some sort of pride of ownership, and that's hard to do, right? And we were trying to reposition it, and we were making great progress until COVID happened. And then it was really hard to get people that could qualify because we were not accepting unemployment as a qualifier of income. And a lot of people were on unemployment. It was what it is. And it's a different client base. So rent relief checks came out, and I thought, not rent relief, just the relief checks came out for COVID. And I was like, this is awesome. Monday morning, everybody's going to come in and pay their rent. 27 big screen boxes at the dumpster. They all went out and bought a TV. Nobody paid the rent. And it was like, oh man, now I got to pay for an extra garbage pickup too, not only on top of that. So very interesting.
Wow, that's
But I
good.
got a lot of horror stories. Like there's so many other things that have gone well though. Like the property I talked about where, every meeting they talk about, okay, we're this far on the plan, we're this far on the plan, when the GP team's giving updates on it. So I've had a lot of other ones that are doing really, really well.
So one thing, I'm sorry, go ahead.
Yeah, and part of it is I did switch with who I'm investing, right? So for me right now, because I want to go active, I'm investing with people that I want to be partners with. So I've done 4 deals in Austin with one gentleman, and we put LOIs in together. We haven't won yet. We want to do a deal together. We run a meetup together. We talk just about every day, just on, back and forth, and, very connected. And so I've been able to switch a little bit how I'm investing, a little bit better strategy, just to be here. So I wanted to get into storage. I wanted to do a deal with Vinki. Guess what? Vinki had a storage deal.
Yay!
And it looked really good. So I wanted to establish a relationship, right? I want to invest with people that I want to work with at some point, and do that. Secondly, I wanted to get into storage. It was one of the asset classes I had not been in. And just to make it even a better deal, the trifecta was, it was in Charlotte. My brother lives in Charlotte. And now those are business trips to go visit my storage unit and look at people's junk. I'll probably just drive by and take a picture just to justify the trip, but I'm not really going to look at people's junk. But it's how things can align like that. And it's a new investment, they haven't even started building yet, but very bullish, then things looked well. And then I actually got to meet one of the main GP partners at the Best Ever conference, and got to talk to him, and it gave me even that much more reassurance.
That's true. I know you were power networker, and then you're meeting with all these people and the sponsors, operators, and you're trying to figure out who you wanted to work with. And we're going to talk about that too in a second. But before that, I wanted to ask you, how do you pick your markets? Because that's very important too. How did you decide that this is my market? I wanted to invest in this market with this sponsor.
Yes, so Texas. I live in Texas. I live in Austin. So I wanted to invest in Texas. I wanted to do deals in Texas. Even my mentorship program that I joined, they do their motto is Texans doing business in Texas. So for me, it was good because I can go drive and see the assets. I can go meet, and one of the new investments I've made in Houston, I actually was able to go do the due diligence day with them. So they invited me to come and do the due diligence day. I know all the 3 main GPs, and they're actually self-managing. And I talked to the one lady that's sort of been a friend of mine since I started real estate investing. I talk to her like every week about how's that property going and what's happening. So that's been very beneficial for me. And then, as I said, I made the one investment outside of Texas in Tucson, Arizona, totally relationship. And then I made the one in Charlotte, totally relationship. But to date, everything I have is in Texas. Now I'm invested in a lot of different asset classes, but everything is in Texas.
So you just want to stay in the Texas market only, or do you want it to
So my
expand?
goal is so on my vision board, there's 3 apartment complexes I would live in. So don't have to be A plus plus plus. I'm not that snobby. And Arizona, Texas, and Florida.
Oh,
Those are
that's
the
it.
3 states I like. And I like the states. I like their landlord rules. I like their pro-business stance. And they're all pretty nice, hot real estate markets. And I think those 3 states, even if there is a little bit of a dip, they're going to be very insulated from it. I mean, Austin was just announced, I think 3 days ago, that it's the fastest growing city in America. You know, it's and significant. So it and Houston are going to go up. I can't remember what the span is, but 2 million people. I can't remember. Houston started at 12 million and Austin started at 3 million. So we're going to go from 3 to 5. That's staggering. You know, and that's going to fill in all the surround areas.
So your research is based on certain kind of tools, or how do you get this information through your search or some news, or how you're deciding what strategies are you using to
Yeah.
figure out these are the good markets for me?
Yeah, so the things that I look at to verify, so I'll go find out what is the income in that area, and you know, I want to make sure it's at least triple, like what the rent is. Sorry, the rent 3 times, so it's 3 times income for the rent. I actually like it if it's 4 or 5. I look at population growth. In other words, is this market looking low or high? I am fortunate to have a partner that has CoStar, so I get that extra advantage that a lot of people don't have, where I can look at their projections, what they think for an area. But you want to make sure, right? It's nothing saying, well, I'm going to bump up rents $150 a month, and the tenant base can't afford that. You're never going to win that way, right? There's another investor. I'm not quite sure he's going to be able to achieve it. He set a new goal 6 times. He's only going to buy properties where it's 6 times. I think you'll struggle to find some properties, but he has put out a couple of offers on some nicer properties in nicer areas. And his theory is, even if I bump up the rent to $1,000, it may only be 5 times there.
So now you're looking to become a GP, right? You already joined a deal as a general partner. I think
Yes. Yeah.
240 units are right in your bio. So how was that journey? I mean, do you
Well,
think?
it just got really rocky right now. We actually just like an hour ago lost the deal. So yeah, but learned a lot again switching over to active. And it was unfortunate that we couldn't get a loan assumption sorted out, but it's again, all the investors no one lost any money, right? Just the GP team that tried to put the deal, we're hopefully gain the trust of our team by not doing something what I'm going to say is silly or ridiculous to try to save a deal. And
That's true. It might be good. Yeah. Overall, it might be good for the investors. I mean, it happened to me too one time because
yeah,
we had to pull back on one deal. We didn't lose any money for our
yeah,
investors. And it was good for the investors actually because they had full faith in us. I think even more faith in us that we made the right decision to pull out
yeah,
of the deal at the right time without losing any money. So,
yeah.
now I wanted to ask you this question. It just came to my mind. You did as an LP for 4 years. Now you're trying to get into the GP. So do you think there has to be some time frame in between transitioning from LP to GP, or it
I
just like happened that way? You wanted to learn everything first and have the complete understanding before jumping in as a general partner.
I definitely think that's something you should look for in the GP team that you're investing with. You want them to have some level of experience, and again, I was lucky to get the extra experience being able to be on the asset management. There was actually another investment I researched how to convert it to a smart apartment, and I did all the work just as a volunteer, just so again, I call it learn and earn. So I was able to do that, and that was an interesting reaction, right? So I had a C- property that hurt me. This was an A+ property. So I did make an emotional switch saying, okay, well, I'm going to go right now for the top of the market, which of course the timing was perfect. And this one is in Denton, Texas, north of Dallas, you know, because that has just exploded in value.
Oh, great. So now let's come to your networking skills. You know, I see you everywhere, Trevor, and everybody knows you in the short time frame that I know you. Just feel like you're a good friend. So how did you build that rapport, you know, across the
Yeah.
board? Everybody loves you and you are all over the place, like omnipresent.
Well, I'm lovable, so that's how that started. I really like people. I really like connecting with people. I really like meeting new people that are starting out in real estate and helping them. So many people were kind to me when I started, you know, so my goal is to pay it forward tenfold. But it's a lot of work. I spend a lot of time being out there, getting connected. I have a big mission this year. This year is 52 appearances. So this is considered an appearance. A podcast is considered an appearance. Later tonight, I'm on the Shark Pool show. I'm actually, if I attend, that doesn't count, but tonight I'm a shark, so that counts. And you know, so my goal is to even build it any further. And I've got a sign up in front of my desk that says, work so hard that you no longer have to introduce yourself. And you know, and it's funny, I go to conferences and I'll get in an elevator and some guy will go, I know you from Facebook, I know you from LinkedIn. And it's very rewarding. And because of that, I get invited to a lot of things, which only again builds my exposure and my network. And you know, it's just, to me, it's everything. Real estate is a team sport. And if you, first of all, you've got to find the right team, and you get that by networking and getting to know people. And then you have to be a team player. Very important to be a team player. You know, to know your role, know your lane. Again, my whole life I've run small businesses and made incremental improvements. That's all asset management is, right? We took over franchise locations, and every one of them, I increased we called it EBITDA. Here we call it NOI.
Right.
Same thing, really. And I increased it at least 30% on all the businesses that we took over, just by proving what I'm going to call sound, smart business. We also invested some extra capital. It's exactly the same thing you do in an apartment complex, right? You go in there, you invest some capital to take it to the next level. You introduce sound business practices, and that's everything from running it better, marketing it better, and you do all these things and you increase the value. And I'm one of these odd guys that I call myself a 1%er, but it's completely different. All I want to be is 1% better tomorrow than I was today, just 1%. And you know, I used to come in to when I managed the property, I say, what's the one thing we could do this week that would make significant difference to the property? And we would have a meeting and we would agree one thing, and we would report back in a week how we did on the one thing. And it was amazing. You know, we had some stumbles in there where we shut down the office for COVID, but in theory, we got 40 things done. You know, it was pretty impressive. And 40 things is a lot of things. It really is. You know, just to make that incremental difference. But this, again, you need partners to be GPs. You need partners to be LPs. And the way to connect and get all those is to have people know, like, and trust you. And I do that by honestly putting myself out there for everyone.
Oh, great. So how did you find out? I mean, if there's how many networks that you can join or how many meetups that you wanted to go in a week, or getting all that information, you know, I just wanted to ask you for the sake of my audience so that we can share with everybody that they can join these different meetup groups or these networking sessions to grow their presence as well
Yeah,
in industry.
so I'll be honest, one of the biggest connectors for me was I joined Julie Peters' Zoom at 8, an amazing network, and I was very regular. And in fact, I've got my shirt sitting over there. She gave me a Zoom at 8 shirt. I have brought more people to Zoom at 8 who have in turn, you know, done that. And it's an amazing, last night she announced hopefully today or tomorrow, they're closing the 11th deal of people that met at Zoom at 8, and she financed. That is staggering, right? So the
Yes.
power of that. And then what I'll try to do is I'll find somebody else. So again, I mentioned Shark Pool. Cornelius was trying to start it. He's a one-man band. And I said, listen, I can quadruple your database on Facebook. I can invite, and that's all I do every day. The next week I set a meeting, and I do every day. I invite anybody who joined or not joined or whatever to come to the meetup that night. And then I send it out to different people. And obviously I've been a supporter of yours. So, I try to join as many. I don't join them all, but I try to join as many as I can. Then there's all kinds, I think we've all been to Marvelous Mondays with Angel, and then I got on her summit. So I was the moderator for the asset management panel, which is again great for my exposure. Just little things like that.
Oh, that's good. I mean, you've been throwing so many golden nuggets. Number one, you said finding the right market. Second thing you said, mentorship is very important. So I'm going to ask you the question, how do you find a right mentor for you?
Yes. So for me, it was, so again, I joined the original program and I'm still part of it. But in theory, I've outgrown it a little bit. And then I found a local mentor here in Austin, James Kamasami, who wrote a very good book, if you haven't read it, called Passive Investing. And I actually helped him for a little while building his network. And then it didn't work out as a consultant, so we just agreed to stay friends. We run a virtual meetup, which is the third Thursday of every month. So we run that together with me and another student. And even there, he said, put out to his students, write me a proposal why you should help me run a virtual meetup. And of course, I wrote one like that day and sent it to him. And, I'm an influencer. I can bring people to the meeting. I can do things, and get people connected and all of those things. And then, obviously I've joined the GOB network, which is where we met. And then from there, I become a mentoring student of David Monroe.
The next thing you said was networking. You're a power networker. We know that. You mentioned a bunch of meetups already. So going to different meetups, making connections. And what do you do when you meet first time? Do you follow up after the call? And how important is that?
Yes, follow up is everything, so excuse me, when people put their contact information, I scan it. I look for people, first of all, that are a good fit for me, right? If I'm investing in Minneapolis, you're not a good fit for me unless you're looking to be an LP. So I try to find everybody that's a good fit, right? Looking to be an LP investor, looking to do deals in Texas, or even just general looking for people to partner with, and then I connect with them. I probably do at least 5 to 10 calls a day with people that I've met at networking events. I do a 30-minute Zoom call with them, and then I follow up with them, and then I try to remember what they need and connect them, right? So, it just happens, right? I mean, I got a text from somebody the other day, hey, Mr. Know Everybody, I've got this land in Orlando and I need a developer. And ever since then, I've been looking hard to find what they need, and to try to, again, give back to people. It's not what you can do for me, it's what I can do for you. And if you have that mentality with everybody you connect with, eventually they'll do anything for you.
That's true. That's very important. Adding value to others, you have to give out what you need first in order to get it. I love that. So I'm going to ask you this question now. Earlier you said, sponsors are very important and vetting the sponsor is very important for each and every deal. Did you create a checklist for yourself over the years? For the last 3-4 years, you've been working on multiple deals?
So the checklist is kind of in my head. It's something I probably need to put on paper. It's in my head, but it really boils down to one other thing too. I didn't really talk about, but do they have the shared values as me?
Mm-hmm.
Again, I don't want to invest with somebody that just wants to bump the rents up and still run, an improper apartment complex, right? I want to improve people's lives, right? So my theory is if you take a property and you improve the property, yes, you'll be able to charge more for that, but you make a better place for your tenants to live. Then I also hear a lot of sponsors that's in property management company. it's always challenging. I'd never want to be a property manager, by the way. Asset manager, okay. Property manager, no thank you, because they deal with all of the troubles. But I want GPs that like respect their property management company and try to work with them to achieve the goal. And then if you do that, right, then all of the investors, they get their returns to use for whatever their why is, right? Their why may be just to retire from the job. Their why would be to put their kids in college, to retire, whatever it is. I think there's sort of that circle of life. And so I like investors that look at deals that way, or sorry, syndicators, and you can get a feel for them, right? If all they do is talk about money and granite countertops, I'm not excited.
I agree on that. Why is very important. So I'm going to ask you, what is your why?
Yeah, so my why is again, I want to become a successful syndicator so that my passive investors earn really good returns on their money so that they can go do their whys, right? So my why is make a community better, make it a good place to work for the people that work there, and in exchange, our investors will get their returns to do their why. Obviously, my why, I want to build my net worth so my children don't have to, I've got this plan, right? Those 3 apartment complexes that I would live in. And then after that, I want to be Walgreens or Starbucks landlord. Not big money in it, but it's a real good thing to give it to my kids because I don't have to think about it. Money, the rent checks just roll in, and it's a really good way for wealth preservation.
Yeah, that's good. And the lastly thing that you mentioned on massive action in your story, which I really like it, because a lot of times we take the information, we soak in the information, absorb everything, and then just sit with it, not do anything. But you've been taking action and massive action. So what are you going to say about that?
Yeah, I mean, what good does it do if you don't do anything with all the information you get, right?
Mm-hmm.
I've always been a super A+ personality, right? I'm super obsessive. I don't know if anybody can tell, and I'm super passionate, and I get very excited about things. And so for me, just going through the day, and all of those things can be different levels of reward, right? A deal doing well is one level of reward, but it's no greater than meeting somebody and introducing them. I've met some pretty cool young people, and I always have a joke. Someday I'll work for them. It's probably, in other words, they're gonna be very successful, and nothing makes me happier than if I had a part in helping them get started.
Wow. Thanks, Trevor. I really love your story, on all the experience that you shared with us. I'm pretty sure all the passive investors gonna be pumped up after listening to you. Wanted to jump on the deals. I'm gonna open the room for everybody. Please ask any questions if you have. Your time is now because Trevor is available.
Hey, Trevor. So I have heard a lot about your story before, and as we continue to converse, one of the things that I want to know is your transition from LP to GP, and your role in raising capital. Like, what have you changed personally about yourself or your activities or your duties in order to create or be an effective capital raiser?
Yeah, so it's quite interesting that I never wanted to be a capital raiser. I just wanted to be an asset manager. And I learned quite quickly that nobody just wants that. You've got to bring more to the table. So on the current deal that we talked about, I didn't quite hit my goal of raising, but I definitely got close, and I'm going to be able to at least double it on my next raise. And so my goal is, and there's been several deals of people that come through Austin that I've tried to get on the team, and they say, well, we'd like to get you on the team, but you got to bring at least $1 million to the table. And so my answer has always been, I'm not going to guarantee that now because I think I'll fail, but in 1 year, call me and I'll be able to do it. I had to switch a lot because to me, it was more about meeting people that needed somebody to help operate it, right? Because a lot of people don't want to do what I want to do. And I thought that would just be a natural in for a deal, but it wasn't as easy as I thought it was. I think part of it is because a lot of the mentors teach you, you buy an apartment complex and you sit on the beach and drink pina coladas and the rent checks roll in. Well, I don't want to be on a deal that does that. I want to be on a deal where the GP team is super motivated to do a great job, right? I don't want to be a passive investor so they can go drink pina coladas. I'm happy if they make money. You know, there's a couple of deals that if, you know, on the, even the deal with Vinki, right? When they double my money, it goes to a 50-50 split. And I'm like, double my money, baby. Let's make some money. I'm happy for you to double, you know, what you're going to get on your side if I achieve these kind of great results on my side.
And 50-50 split is not bad either, you know, after the 2x returns, because that gives more, I would say, motivation or, you know, to the operators to work harder.
Yeah, and a lot of people, when they first look at a deal, they think, oh, look at that, they're getting all this stuff. Okay, you know, they're getting acquisition fees, they're getting all these things, and they work hard for it. And today I lived on the other side of the hard edge of the coin. I'm going to lose substantial amount of money because my deal didn't close. That hurts. And that's the risk that GPs take. And so they also need to have the rewards when they do get a deal done and when they do it. Now, again, they all need to have skin in the game. They all need to have I think the value of making it a better place to live, not just talk about granite countertops.
That's true. And plus, yeah, I'm sorry, go ahead, Peter.
Oh, no, I had a new question, but I can wait.
No, go ahead, please.
All right. So, Trevor, like you're doing these things, all the like the outreach stuff I'm thinking about, and like it's obvious that you're able to do it like consistently, which is like the other big piece. Do you have like processes in place, whether it's like an Excel spreadsheet? You know, I would just like make it up where like, you know, spend an hour on Facebook and you check it off, and then you go to the next thing, check it off. Or do you just kind of, is this naturally your personality? So what I'm getting about is like how do you like maintain that consistency, getting busy with all the stuff?
So I do have checklists for certain things. So for example, my 52 appearances, I have a spreadsheet that I track where am I on my goal and what percentage of that have I achieved. And the other side of it is I'm an obsessive compulsive maniac. And so when I start doing stuff, it becomes almost habit. And I don't sit down and I've started to. So for example, I realized I only have one photo of myself. So every day now, as I'm skimming through LinkedIn and Facebook, and I'm skimming while I'm watching TV, eating dinner, drinking my coffee, whatever it is, and I see a cool photo, like somebody home like this, I take a screenshot of it, and now I'm going to cut them all up on a piece of paper, and I'm going to go to a photographer and say, I want every one of these shots, and then, you know, create it in, and, you know, and build a lot of my brand awareness and my presence, and, you know, and a couple of the times I'm doing that, you know, I'm trying to find people who are trying to build. So one of the young ladies is on this call and she wants to build a marketing machine for people doing exactly what I'm doing. And I'm like, make me your guinea pig, and then we can promote it that, you know, it works because I'm out there and doing it. And I think that creates a win-win, which is huge, right?
Yeah, thanks.
But being obsessive is a gift and a curse.
I know.
And I know some people freak out when I answer their messages at 4 in the morning, but it's just, I can't stop myself. Every once in a while, my wife does take my phone and she goes like this.
Right.
So I'll look at her.
That's great.
So then I know it's time to put the phone down.
Yeah.
And I do try to put it down by 9 p.m. every night. It's a goal to be off by 9 p.m. LinkedIn challenge with Yona's killing me though, because some people aren't posting till late. I want to be supportive. You know, I don't know if anyone's ever done Yona's LinkedIn challenge. I know Esther's doing it with me now, and man, it's a full-time job. Like I thought I was active. This is super active because they put you in a group of people and you have to find your people and comment and like on them. And the goal is to get 18 likes and 18 comments on every post for 10 days in a row. And then of course, because I got to push the envelope, I did Saturday and Sunday too. So I'm doing 12 days and
Awesome.
Hey, Trevor, I was just curious, with so many contacts, what CRM do you use?
yeah, so I'm terrible. I'm a dinosaur. So it's being uploaded now into, I've been just Excel spreadsheet guy. It's being uploaded to Active Campaign. And the goal was to have everything go live this Friday, but unfortunately I got sick this week. So it may not go live Friday because I'm not quite ready.
Okay. I've been using HubSpot myself.
Yeah, I've heard great things about HubSpot, and I've heard once you got to pay, you don't mind because you're successful if you get to that level.
I'm still using the free version.
Yeah.
So soon,
Yeah.
yeah.
It's one of those things you buy and you pray you get that successful that you need to pay.
Yeah. Yeah.
It's okay if you roll it in, you know, a couple of $1 million every quarter and fundraising and stuff.
Yeah, then it's in the noise. Yes. Cool.
That's good. Any more questions for Trevor, or should we just network for a little bit? We have like about 15 people left, so we can just network.
Yeah, and I will put my contact info in the chat. Someone asked about, you can definitely set up a call with me to talk about what we're gonna do.
And also, if you ever put your spreadsheet together with your due diligence checklist, I would really love to have a copy of that if you can direct them to your website or wherever you're going to share it.
So that is everything. And then this I forgot to put, if you want to schedule a meeting with me, this is my calendar.
Okay, so if you wanted to reach Trevor, you can go to LinkedIn and look for him over there, Trevor Thompson. Thanks, Trevor.
No, this has been awesome. I thought we'd have more questions. Either I did such a great job, everybody's well educated,